Can families afford the typical house prices, and what percentage of their overall household incomes are going towards loan interest typically? If we went from 42.5% household income going towards loans to 59.9 to be on par with Sydney, with no major changes in wages, our median house price at the moment go from 807k to 947k. We are still very affordable compared to the other capitals. What has happened as a final insight to wages, and how does that sort of tie into all this?
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investors Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day and welcome to another deep dive episode of Perth Property Insider, where I'm going to look at where we're at in terms of affordability and how it might affect and play into the growth of our sale market and rental market over the next year. It was about 9 months ago that I came to you with a similar episode, and I think it really helped me, so I'm hoping that it helped a few other of our listeners, see just how affordable Perth is. So 9 months on, our median house price has grown by a lot over the last 9 months. Are we still affordable on the sale and rental side? Let's go into the stats and I'll break it down for you. So the latest Real Estate Institute of Australia Housing Affordability Report is really helpful, and it's what I am referencing a lot of in this. So it looks at the proportion of family household income required to meet loan repayments, and it compares the various capital cities around Australia. So I think it's a really useful report to see, can families afford the typical house prices, and what percentage of their overall household incomes are going towards loan interest typically. So in Perth at the moment, for the typical household that has a median weekly family income of $2,675. When we extrapolate that out over a year, it's $139,100 for the typical family household in Perth. Those on the East Coast, that might sound relatively high, because it is. We've got the second highest household incomes from around the country. So that is naturally giving both tenants and homeowners the ability to pay more for property prices. And it was almost the perfect storm, really, because when you look at how much prices have already grown, imagine how affordable things were even 2 years, 3 years ago, before property price increases have occurred at 50 to 75% in most areas. So can people keep affording to pay more? That's the question for today that I'm really asking. So when we look at that median household family income, 2,675, the average loan monthly repayment at the moment is 4,931. So that represents a 42.5% of the overall wages for a house. So still quite high as a percentage terms. But when we compare it around the country, and that's why you've got to look at, okay, well, when are migrants deciding what capital city to live? The degree of wages and the employment opportunities is on one side. The cost of living and cost of housing, probably most importantly, is on the other. So even though prices might seem higher or lower in certain areas, you've really got to look through to what's the net, what's the proportion of household income going towards your biggest cost, which is your loan interest. And in Perth, we're faring very, very well, still at 42.5% of household income. That's coming off for the December quarter. In the September quarter, we were at 40%, and the December quarter last year, we were at 36.9. So we've seen about a change of 6%, 5.5% over the last year. Affordability has decreased in that percentage of household income going towards loan interest. So when we compare around the country, we're still right up there affordable, with only the ACT at 36.4 and the Northern Territory at 34.3% of household income. So not sure how many people really want to go and live there. They're certainly not popular from a lifestyle point of view. ACT is very much driven by the government and a lot of workers out of there, a lot of sort of business and other things out of there, but not as much lifestyle focused. We've then got Perth at the 42.5. Most people aren't going to want to go live in the Northern Territory purely for lifestyle reasons. Some might, but it's not certainly the draw card. When we look at the other capitals above us, we've got Tassie at 43.6. That's a bit more of a straight lifestyle, retirement destination, not so much for employment opportunities and for family lifestyle per se. So a bit sort of remote. And I know calling Tassie remote is almost the pot calling the kettle black when Perth is the most remote capital city in the world. But once you're here, we like having a bit of separation to the rest of Australia. So then going up from there, we've got Victoria at 47%, Queensland at 49.6% of household income going towards loan interest, and New South Wales still at a whopping 59.9%. So I imagine only having 40% of your take home pay to go towards the rest of your costs in your life and try to save. And that's why so many people are moving out of New South Wales. I did an update on population movements in my last Perth property market update for March. So check that out if you haven't already, where I took a real deep dive into population movements and the number of houses getting built and what that sort of meant for supply versus demand on that side. So it's pretty tough to save a dollar in New South Wales unless you're earning extraordinary money, and really is becoming a case of haves and have-nots there. So that's why a lot of people have been choosing to move to Perth and to Queensland. Queensland for the lifestyle aspect and employment opportunities as well. But you can see there's a big difference between Perth at 42.5% and Queensland at 49.6% of household income. Might not sound like a lot, but you can do a lot with 7% per year. That's a big holiday that you can take, or kids in private school. So big difference. Now, when we actually go a bit deeper into some of these stats, there's going to be a slight reprieve because this was for the December quarter, and we've subsequently had interest rates reduced 0.25% in February, and generally a 0.25% reduction drops and improves the affordability or overall percentage by 1 percentage point. So not a massive difference in terms of overall proportion of wages, but translates to about a 1% improvement in the overall amount going towards your household income. That's probably because most people have a 75 odd percent loan, so it's not affecting the whole amount. And that was the stats that they were quoting as to the difference that it makes. So I haven't cross-checked that, so don't hold me to it. Now, so being the most affordable state other than the two territories, that's got to be a decent flag to fly for coming to Perth. What sort of potential might there be for people to afford higher house prices? So when I look at if we increased our percentage of household income from 42.5% to 49.6% to be on par with Queensland, and if we had no changes in wages at all over that sort of period, that would see our median house price go, according to CoreLogic's index, we're at 807. According to Reba at the moment, we're at 760. So slightly different there, but I'm going to compare CoreLogic index at this time because I've got that number for all the other states where I don't have the REWA median house price. REWA's just for the Real Estate Institute of WA, and they don't have those other prices in front of me to compare with. So imagine if our affordability went to that of Queensland, we'd go from house prices of 807 at the moment to 863. So that's a 7 odd percent increase, which would put Perth then above Adelaide, Hobart, Canberra, and Melbourne in terms of affordability, but still below Brisbane and Sydney. When I say in terms of affordability, I mean in terms of overall median house price, it would then put us above those other states, but still below Brisbane, that's at 894 at the moment. So we'd move to 863,000. But Brisbane would then be above us at 894 and Sydney above us at 1.186. So we'd be the third highest priced capital in Australia, which kind of seems appropriate to be ranked there. I'd put us above Adelaide, Hobart, Canberra any day. The only outlier in that mix is that I feel like Melbourne, would then be very undervalued at its 772,000 at the moment, and it's supposedly the index is less than Perth, which is why we are starting to buy into Melbourne for some clients, especially those that have got a decent portfolio already in Perth. I myself have got property there, and that's not to say that Perth still doesn't represent good opportunity. It does. We just got to be a lot more selective. And if you've already got quite a few properties here, it makes sense to spread out, reduce your land tax, and be positioned when Melbourne eventually does turn around in the next 18 to 24 months, and still could be some time away. But chat to us about our buyer's agency options for Melbourne if you're in that sort of boat and want a bit more diversity. So when we compare what might happen if our overall household income affordability went to be on par with Sydney, boy, oh boy, if we went from 42.5% household income going towards loans up to 59.9 to be on par with Sydney with no major changes in wages, that would see our median house price at the moment go from 807K to 947K. So we are still very affordable compared to the other capitals. And this to me makes me think that we're going to probably end up somewhere between 850 and 950 on our median house price before things start really cooling off. And it's also why I titled the last episode of my Perth property market update, the next phase of growth, because our bottom end has had a big surge. I'm now seeing activity move up into the middle between 800 to 1.2 more strongly. I think the bottom end will still have a bit more growth, but as the prices and activity moves up into the middle, you can see that that's going to further strengthen the median house price because more properties are going to be selling to pull that median up further. And why do I say that? Well, those that have equity in the bottom end using this chance to get into better homes in the middle that still represents really good value compared to what has happened in the bottom end, and whether we'll finish the cycle by having the upper end grow strongly or whether that will have to come back around to that growing strongly at the start of a next phase, time will tell. But certainly lots of potential upside there for people to afford higher prices from our current 807,000 price point to at least 850 to 950 when we compare with the other states. Now, if we did go to that full sort of 950 mark, in terms of just straight median house price, that would put us only below Sydney. And if you recall back, and I don't know exactly what year it was, but at one point we were actually higher than Sydney and we were the highest priced capital, which is probably why we overshot things and had to wait such a time for a correction to occur. So I don't think I'd like to see us, push up that far. But again, all these things are fairly relative. So it's going to depend what happens to the other capitals over this time. Brisbane, Adelaide have continued to grow longer than we all thought. And we are getting some wage price increases to help people afford more too, which I'll go through in a minute. So those figures were really just possible projections to take our affordability in line with the other capitals without looking at any kind of wage increase. And if further wage increase happens, then you'd think that we've got a longer runway still to go on prices increasing. Now let's take a look at rental affordability, shall we? So over the last quarter, the proportion of family income needed to meet all rent repayments has increased by 0.5%. So not a major change, not much changing too much on the rental side. As you'd know, if you've listened to my Perth property market update, our median rental price has been relatively stable for the last 9 months or so. It did just have an uptick from $650 per week to $680 per week over the last few months. This data is to December quarter, where they make their comparisons to. So nationally, Perth is remaining in the middle of the pack as far as rental affordability goes. So at the moment, our current percentage of household income is 24.3% going to it. The national average is 24%. So we're right about average. We had Queensland at 23, Northern Territory 24.3 as well. So same as us. Victoria is actually one of the most affordable places to rent at 21.5, ACT at 19.2. So I think rental yields, especially in Victoria, need to strengthen further before investors are going to be more excited to buy into there. And that's going to mean higher rental prices for the tenants. But that's really going to be dependent on if the population growth flows through as it's predicted to, and it'll happen at some point. It's just a question of how long, and everyone was asking the same questions for Perth way back, thinking, oh, when are rents going to increase? They finally started doing. It then took some time for the market to move around to houses increasing, but that will happen in the cycles to come. So New South Wales remained the least affordable state for tenants, with 28% of family income going towards meeting repayments. So 28% compared to Perth's 24.3. Now let's take a quick look at the potential to pay higher rental prices in Perth. As I mentioned, we're about average of the other capitals. We're at 24.3%. If we moved up to 28%, which is to be in line with New South Wales, that would see our median rent increase from just 680 to 705 per week. So I definitely think that's possible and foreseeable, and we may end up being the most expensive place to rent relative to household incomes of all the capital cities. I might even put that prediction out there now, because I think over the next year we should have a further 5% increase in the median rent. So that will likely flow through, and depending on how wage increases go, to us being above Sydney in terms of the proportion of household income going to rents. So starting to cap out more on the rental side, our yields will probably keep out, our house prices will increase by more than the rents will in all likelihood over the next year, and that will keep slowly reducing our overall rental yield. And our rental yield, median rental yield compared to the other states at the moment, it's 4.3. So it's the highest of the main capitals. Adelaide at 3.7, Brisbane at 3.7, and Melbourne at 3.7, and Sydney at 3.1% rental yield. So we're still faring pretty well in terms of the attractiveness for investors. The only two places that had a higher rental yield was Hobart at 4.4, and which are just 1.1 percentage point higher than us, and Darwin at 6.7, and that represents the risk of getting into Darwin still, and just how deflated their prices are. So there is a fair bit of speculative investor activity going up into there, but you have to have a very thick skin and big kahunas to go into that market and ride that roller coaster, because I've seen what happens in our northwest when the market comes off, and if you're left swimming naked when the tide goes out, you really want to be careful looking at investing in those sort of more regional areas that are most highly impacted by mining. Now, what has happened as a final insight to wages, and how does that sort of tie into all this? Well, the median weekly family income in WA is, as I mentioned, the second highest in the nation. We're at $2,675 per week. Wage price increase has been 3.3% over the year to December 2024 in WA. So 3.3, that's, going to give us some more potential for homeowners and tenants to pay more if it continues at the same rate. From what I'm seeing in our industry, wage price increases are not slowing, and they seem to be accelerating. So I'm not sure when that's going to come to a peak and start reducing. I will do a deep dive at some point in future episodes on our employment opportunities, our economy, and our number of advertised job vacancies. So stay tuned for that one, which I'll recover in an episode coming up, so we can take a look at that other angle to things of how that's going to contribute to overall economy and our overall house and rental prices. So hopefully this has been useful. In summary, I think we've still got a bright 12 to 18 months ahead to sort of see beyond that. I think there's the ability for people to pay higher prices on particularly sale prices in Perth, some ability to still pay higher rental prices, but it is getting a bit more saturated and slowing and capping out. And I expect that we'll likely end up somewhere between that sort of 850 Queensland affordability point and 950 the Sydney household affordability point for loan interest. So hopefully that gives you some idea as to where we're likely heading. If you've enjoyed this episode, do like and share it with friends and post us a quick review because I love reading them and certainly appreciate your feedback. And if you do have any ideas for future episodes, reach out to me, jared@investorsedge.com.au. Check out our website for all the services we offer, which is a full holistic service offering from strategy, buyer's agency, property management, and sales. So thanks for tuning in. Catch you on the next one. Bye.
Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.